Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Today we're going to be analyzing the 49th commitments of Traders Report of 2024. And as we always do, we shall start off by looking at the largest changes in commercials net positions. But before we jump to the review, just a brief reminder for anyone who is new to COT analysis here at COTBase.com, you'll find a lot of educational material, not only in written format, but we have some very useful videos as well that can guide you through the analysis process. And of course, if you have further questions, feel free to comment underneath the video or send us an email to info@cotbase.com. Let's get started. As you can see, we have crude oil, the Brent crude oil on top of our list based on a 52-week look-back period when we look at commercials net positions. The change in commercials net positions, we are of course analyzing the classic COT report type, or as CFTC calls it, the legacy COT report type, and the futures and options combined data type. There are of course other COT report types, and you may choose to look at only futures data or only options data. And of course, we've got plenty of data sets to analyze, but we're going to stick to the traditional net positions. Let's get started. Crude oil, 54% change in commercials net positions. Now, the number itself seems large, and it is a large change. However, you can also see that this 52-week range within for commercials, it's not surprising to see this larger number. It is a bearish change signal, of course. My only concern is that we have seen crude oil, the Brent crude, decline already. The signal just may be a little bit late for us to act upon. Moving to a 5-year chart, you can see that this current level in commercials net positions puts us in roughly a neutral zone. We don't have a bearish COT Extreme nor a bullish one. So anybody who is trading crude oil and analyzing the commitments of Traders Report this week, I would say sadly there is not much to conclude from it, or not much signal to use. However, if you are willing to look around at COTBase.com, you'll find an interesting indicator that we call the iCOT Intraday Indicator, and it is developed specifically for intraday trading, bringing you COT analysis basically into the short time frames, right? Because COT data is a weekly data, but we've always dreamt about having this tool in short time frames, basically live trading. And this is a great example. This is crude oil, of course, light crude oil. This is a 4-hour candlestick chart. This is the indicator with AfterSignal filtering out the signals and helping you identify the best buy and best sell opportunities. This, of course, can be applied to much shorter time frames as well. This is a 1-hour candlestick chart. If you are interested in this indicator, please check it out at the indicators page, iCOT, the basic and the AfterSignal version, bringing you COT analysis into the intraday time frames. So quite interesting tool. By the way, if you are enjoying this content, please consider subscribing to our YouTube channel and hitting that like button. It would mean a lot to us. Thank you so much. And back to our next market, which will be the Chicago wheat, with a 15% change in commercials net positions. That, of course, can be seen here on the chart. It is a bullish change signal. However, if you compare this to the past couple of weeks, you can see that this change, although might be a bit larger than the mathematical average of change sizes, it is nothing unexpected or unusual, I would say. So maybe not the best signal to act upon when it comes to COT change signals, because again, I would say and you know what, this is actually a good example. You can see here this change, the report date November 11th. It was issued later, of course. This change, you can just look at the size, right? But with your eyes, you can see that this change was much greater than average. And that change signal was actually successful. So you really need to understand there's a difference between an average change size and something that's greater, because basically what it means is, of course, traders, especially we're talking about commercials who have the most extensive knowledge of the underlying commodity know something that is, of course, affecting price. So that is a great signal. But the ones afterwards, I would not consider them to be something to act upon. Now, moving to a 5-year chart, we can, of course, examine the stress level in this market, and that's showing us a more clearer picture. With these recent changes that's been going on in traders' net positions the past few weeks, month, we are getting closer and closer to bullish COT extreme levels. So if you take the horizontal red line over here at my cursor, you can see that on this 5-year chart, only a few periods of times have we seen commercials at these or above these net levels. We are, of course, roughly at around 70,000 contracts net long. It can reach 100,000 contracts net long. It is becoming a more bullish COT extreme situation in the Chicago wheat, which of course we are happy to see after the wheat declining since basically May of 2022. This bullish COT extreme suggests that in the medium to long term we may see higher prices coming. The next market would be the Kansas City wheat. However, it is a market that, of course, correlates significantly with the Chicago wheat, and so I'm going to jump over that and open the Brazilian real, a currency where we have an 11% change in commercials net positions. You can see that change size on the chart. Seems to be, I'm sorry to say, these changes are not that exciting. It is a bit larger than average, for sure. It is a bullish change signal, and we do like the fact that it's coming when prices are coming down. So it is suggesting that strengthening in the near term may come to the Brazilian real. But again, I would look at something of a magnitude like this one over here, just at that bottom. This was a bit larger bullish change. So you know what? This actually may be similar in size. We'll see if it can affect the market. It would in the next few days. COT change signals are more shorter term COT signals, whereas if we move to the 5-year chart, then of course we get the COT extreme analysis part of things. And here we do not have a bullish or bearish extreme to talk about. It's more of a neutral COT extreme that we have in the Brazilian real. The most bullish extreme was actually here at this low, and you can see the price has popped up afterwards, but it would not shift the trend. So I can imagine that the Brazilian real continues its course downwards, and as it does, we may see a rise in the stress level, the bullish stress level in the market, meaning commercials reaching 50,000 contracts net long or even above that, whereas large speculators may go sub 50,000 contracts net short. Moving on to large speculators COT extreme analysis, we've got lean hogs on top of our list with an all-time COT extreme. Now, of course, we talked about lean hog, and this has been the case for quite a while, but this is not surprising at all. All-time COT extremes can be present in a market for many, many weeks, possibly even a month before a reaction happens in the market. So all over the place, large speculators, commercials, even small speculators, who we know are a lot of times in livestock markets are commercials themselves, just they don't reach reporting limits, are at an extreme. So this is a bearish extreme, suggesting weakness coming in lean hogs. Moving on to the euro, we're going to jump over livestock complex. The euro is showing a 247 report extreme in large speculators net positions. The same exact report extreme can be found in commercials as well. It is a bullish COT extreme, no question about that. You can see that the last time we had that extreme was just around this bottom, which was a successful signal. So that in itself is exciting. However, we're going to move over to the dollar index, our last market for the review. The dollar index is more bullish than bearish for sure. So the fact that we have this bullish extreme in the dollar index would raise some caution with the euro. Obviously, we know that the largest portion of the dollar basket is the euro itself. Now, of course, this is the dollar index. It's not the true US dollar index, or unique COT data on the dollar index. But it is telling us, bullish extreme is present. The rise can continue on. We shall see. We shall see what happens. Anyways, that's going to be all for this review. If you have any questions, once again, feel free to comment underneath the video. If you haven't yet subscribed to our YouTube channel, then please subscribe. And hit that like button if you like the content. Thank you so much for your attention. I hope you enjoyed it, and I wish you guys a wonderful weekend. Take care. Goodbye.